accountant, first of all, they can learn, unlearn, relearn many things. Normal procedures here, we will invite the speakers forum, they will come and join personally. Would have been taken place, but thanks to COVID, we were able to get our learned speakers from their home or their offices. They are sharing their knowledge with all of us, and we will not be able to get, that's a greater opportunity, by getting the knowledge from the very eminent faculties, very eminent tax experts like our Dr. Rakesh Gupta. I can go on add many things about Dr. Rakesh Gupta. Is one of the best supporter for this profession, and in fact Delhi, all the chartered accountants are getting a lot of benefit out of him. He's a walking encyclopedia of the Income Tax Act and its impact on these professionals and their professional practices. With this, I once again welcome Dr. Rakesh Gupta ji to Coimbatore by virtual mode, and very glad, sir. I'm also thankful to you. When I called immediately, you accepted the invitation of the Coimbatore branch and readily to agree and address on the very important critical issues on deemed income, and a lot of issues we are facing. And now the faceless assessment and your interactions, your knowledge sharing will be useful for the chartered accountants who are on practice. Thank you, sir. Thank you very much.
Thank you, sir. Thanks for your introductory remarks, sir. And introduction of speaker by our Chikasa chairman, Sri Srinivasan. Please, Srini.
Thank you, Chairman. Good evening, members. I am very much happy to introduce our today's speaker. He has graduated from St. John's College, Agra in the year 1980 and secured first rank in the university. He is a member of Institute of Chartered Accountants of India, Institute of Cost Accountants of India, and Institute of Company Secretaries of India. He has continued his study journey to complete his LLB, LLM, and PhD. He was appointed as the member of the Income Tax Appellate Tribunal at the age of 37 years, and he was posted at Hyderabad. He don't want to limit himself as the member of ITAT, so he resigned later on. He has co-authored 2 books published by leading publisher Taxman. One on search and seizure and assessment of search cases, and second book on taxation of real estate developers and joint development agreements. He is presently practicing as an advocate and appear before the Income Tax Appellate Tribunal, High Court, and Supreme Court of India. During his and High Court level, drawing wide media coverage. He has participated in United Nations Committee of Experts on International Cooperation in Tax Matters, held at United Nations headquarters in New York in the year 2017 and April 2019, at regional headquarters in Geneva in October 2018. He is a member of the International Association of Tax Judges and participated in its meeting held at Helsinki, Finland in October 2017, Cambridge, UK in September 2019. With these words, I present before our members Dr. Rakesh Gupta.
Thank you, Chikasa chairman. By the speaker, Sri Rakesh ji. The session is for you.
I mean, my action in such nice manner. Ramaswamy sir, past president of the institute, our alma mater. Mr. Shanmugam, chairman of Coimbatore branch. Mr. Palani Sami, Mr. Prabhu, and Mr. Srinivasan, and a galaxy of my friends from Coimbatore and from the other parts of the country on my invitation. The topic has been given to me, deemed income. The deemed income, like I am deemed to be present in Coimbatore. I do remember vividly when Ramaswamy sir asked me to be physically present about a few years back at Coimbatore, but I could not make it. At that time, probably Coimbatore was not connected by air with Delhi. Direct flight was not there. I repented my decision not to be with all of you. And this COVID made it possible that while sitting, and you know that I am not even in Delhi. I have joined my wife in Chandigarh, and from there, and this is the beauty of this virtual webinars, that you can be flexible, you can be mobile, and you can have access to any part of the world. I am very much thankful. I am very much thankful for such wonderful invitation. Deemed income. The income of the receipts which are not of, or which are not in nature of income, but are yet deemed to be the income. Question which arises, such kind of receipts can be given color of income, but then of course the sovereign now has got all those powers which are ordained or which can come within the circumference or constitutional provisions. And whenever such kind of deeming fictions were created, and when these deeming fictions are called in question before the court, and the court by the cases upheld the constitutional validity of these provisions. So today we are not on that aspect, but I am very much thankful to Mr. Ramaswamy sir. He has already sent me, about 20 questions. In other times I framed the issue, but then this time he has taken that task and relieved me of that responsibility of framing the issues. But I'll come to them. But let us understand first of all about the deemed income. So there may be certain receipts which do not have any trace of income, and yet the legislature treats them as income, and that too taxable income. There may be certain receipts which may not be of revenue nature, which may be of capital nature, yet by virtue of such deeming fictions created under the statute, even such capital receipts are treated as taxable income. So if you remember, there is section 2 clause 24 subclause 10 under the Income Tax Act. Now that is within the definition of the word income under the Income Tax Act itself, and the deductions which you as an employer make out of your employee salaries on account of the provident fund, or on account of the employee's estate, or on account of the superannuation, or in respect of any other welfare, then section 2 clause 24 subclause 10 says that it will constitute your income. Now something, it is very astonishing. Now I, as an Indian, or I foreign on behalf of the state, which is a welfare state, help the state in discharging its welfare function. And while assisting the state in discharging its welfare functions, now I deduct certain amount out of my employees' salaries or workers' salaries. And the legislature has got cheeks to say that these will constitute your income. Similarly, under section 2 clause 22 subclause small e, now any payment, loan or advance by a closely held company to a shareholder having less than 10% voting power, or to any concern in which the shareholder has got substantial interest, to the accumulated profits of the lending company, that will constitute dividend. Now you can very well imagine the kind of imagination on the part of the legislature. Now in one instance, contributions of the employee which you deduct, and in that capacity you act as a conduit, because ultimately you have to make it over to the government. And in another instance, the amount of loan or advance are treated or are sought to be given, not given, but then they are deemed to be in the nature of income, and that to the taxable income. Similarly, advance forfeited. Advance in connection with the transfer of immovable property, whether the transfer has taken place or not. Now that constitutes income. Advance in connection with the transfer of an immovable property obviously has got all attributes of the capital receipts and may not be having any attribute of the revenue nature. Yet, legislature says under section 2 clause 9 that it will constitute your income. Similarly, we have got section 68 to section 69 now, which also says that not only would such kind of payments which are covered, such kind of receipts which are covered under section 68 to 69D, not only as the income, but then income from the undisclosed source. Similarly, there are several provisions under the Income Tax Act which though say that this is income, but then income even if not received in this year, or even if it will not be received in times to come, and yet it will be treated as income. Like in case of an immovable property which is lying vacant, house property which is lying vacant, which is not actually yielding any income, but section 23 subsection 1 clause A says that the rent which it would fetch in case it is let out, that will be deemed to be the rental income, that will be deemed to be the income from house property. The second instance in such kind of a situation is like section 45 subsection 2, where a person holding a capital asset seeks to convert that capital asset into stock in trade. Then on the date of conversion, it will be deemed as if the transfer has taken place, meaning thereby that as on that date, the capital gain is deemed to result. That is a different matter, that by virtue of the later expressions which has been used in section 45(2), such crystallized capital gain is liable to be taxed, in fact, in the year in which that stock comes to be sold. Similarly, we have got section 50C, we have got section 50CA, we have got section 43CA, then we have got section 56 to 10, and then of course the transfer pricing provisions. So 50C, that if you are holding some capital asset in the nature of land or building, or both, the consideration actually flowing or actually receipt is lesser than the stamp duty value. Then section 50C says that irrespective of the amount which you receive on account of the transfer of such land or building, now you will be deemed to have received to the extent of the stamp duty value. Though there are certain exceptions which have been carved out in that section, but then I am on the aspect as to what extent the legislature has envisaged or has gone to the extent of deeming that certain amount which will never be received and yet is treated as income. That is the beauty of our income tax. Our Income Tax Act is replete and full of such deeming fictions. Section 50CA, that if there is a transfer of unquoted shares and the consideration received or flowing is lesser than the fair market value, that fair market value you may never realize, but then the difference between the fair market value and the actual consideration, that will be deemed to be the income under section 50CA. Similarly, under section 43CA, if you are a real estate developer whereby you are holding land or building or both as your trading assets, and the consideration received or accruing as a result of the transfer of such land or building which you are holding them as stock in trade is less than the stamp duty value, then section 43CA deems as if the stamp duty value is the actual consideration received by you or accruing to you. As if and as though it was not enough, section 56 subsection 2, now clause 10, earlier it used to be 56 subsection 2 clause 5, 6, 6A, 7, 7B, etc. I remember whenever I and Dr. Girish Ahuja used to travel together, he always used to say that this section 56 subsection 2 clause 5, I mean, I was the responsible for its birth because I had occasion to argue the matter of the then Chief Minister of Uttar Pradesh, Ms. Mayawati, and there a huge amount of the gifts were involved. And when we proved that those gifts were in recognition of our personal attributes and services or quality, and therefore they were of capital receipts, and this act was amended to incorporate that kind of a clause in section 56. Anyway, I mean, even if I am blamed for the birth of certain sections, I mean, it gives me some amount of satisfaction. Anyway, so 56 subsection 2 clause 10. Now, it says that any amount of receipt of money without consideration. Now, that would constitute income. There are certain exceptions. Those exceptions that if it has been received from a relative. Similarly, when the receipt of an without consideration where the stamp duty value is more than 50,000 rupees, or the difference between the stamp duty value and the actual consideration paid now is more than 50,000 rupees and the whole of that difference. Similarly, if you are in receipt of a movable property, either without consideration or for inadequate consideration, that will constitute income. So now you can imagine in that long series of the deeming fictions whereby the legislature had got audacity to treat even such receipts which are essentially of capital nature yet as income, taxable income, and then, I mean, when it's taxable income, then it's bound to be taxed. As though that is not ended as yet. Now, there may be certain situation where because of some technical breach which you happen to make, then the legislature deems that even such technically breached payment now would constitute your income. Like you remember under section 48(3). Now that deduction is not allowable. But then if you may not have the year in which you claimed that, and in the year in which you claim the deduction, but then subsequent year, when you happen to pay it, then it will be deemed under section 40A, subsection 3, capital A, as if that is your deemed income. But primarily, I think that today's discussion, because the tone, tenor, and texture of those questions which have been flashed, they indicate as if that the scope of today's discussion probably is expected to be in and around those deeming sections of section 68 to 69D. So I will deal and dwell section 68 to 69D, and then I will try to make distinctions between the deemed incomes and the undisclosed income, and then the income from undisclosed source. Because all these three terminologies which I have just used, deemed income, undisclosed income, and income from undisclosed source, I mean, it appears as if they are somewhere near to each other. Consequences, because the part of today's topic is the consequences of the deemed income. So I will first of all deal with section 68 to 69D, certain important propositions of law which are embedded. I am conscious that, or rather I would say I am always privileged that I am speaking before the august gathering of very seasoned and illustrious my chartered accountants friends. I mean, who are well versed, well informed about the position of law. And therefore, I can take the liberty of dealing and dwelling certain aspects of the matter, I mean, which I can say that I am trying to raise the bar of or the level of our discussion. Now, section 68, as all of us know, is a section regarding the cash credits. We have read it umpteen number of times, countless number of times, and therefore I need not to go deeper into that section, except to say that section 68 now creates a fiction whereby any sum which is found credited in the books of an account of an assessee, and if its nature and source is either not explained by that person, or even if it is so explained by that person, but then the explanation as to the nature and source is not to the satisfaction of the assessing officer, then such amount which stands credited to the books of account of that person now will be deemed to be the income. That is what section 68 loosely, and there is a proviso which was added with effect from assessment year 2014 to say that when the nature of that receipt is on account of either share capital or share premium or any amount whatsoever in that nature, then apart from the source, then you have to prove the source of the source. Now, only then it can be said that they have discharged the bonus. Now, associated with this section 68 and thereafter section 69, certain important principles of law. Now, section 68 to 69D, as I said, that we had all along been reading. Though section 68 was there in the 1922 Act, but then it was codified in 1961 Act, and 61 Act is there for 60 years now. We had all along been reading. But until section 115 BBE was enacted, and that too in the present form, which speaks of the levy of a stepped up higher tax rate, we probably may not have bothered about the import and impact of these sections. I mean, in that sense, to that extent, with that much of depth. But since section 115 BBE is a natural consequence on and upon the application of these sections 60 to 69D, therefore, I mean, it assumes importance on our part. I mean, to be aware about all facets which are there and which impact us. Now, section 68, the moment there is some found credited in the books of account. Existence of the books of account, as all of us know, is a sine qua non, is a condition precedent. I remember in 291 IT at 232, your own Madras High Court. And I said this. And even in that case, the SSE prepared on the basis of the single entry system, the profit and loss account, income expenditure sheet. And there was credit appearing into that balance sheet. Taj Borewell is the name of that case, 291 IT at 232. Honorable Madras High Court said that if the books of accounts have not been maintained, and even deholds the books of account, even if you have drawn the balance sheet, then also it cannot be said that there is a credit appearing in the books of account, and therefore the absence of books of account is enough to prove this addition made under section 68 fatal, or I mean to the addition under section 68 which was made in that case, I mean the courts struck it down. So credit in the books of account is a sine qua non. So any sum is found credited in the books of account of an SSE. Then as an SSE, you are required to explain the nature and source. And then kindly mind, there is a onus. Onus is on the SSE to explain the nature and source. So it will be for you to explain the nature and source. I remember one of my very good friends, I mean, whose name and whose photo did I happen to see, Mr. Atul Puri. He asked me one question, and that question has got bearing on this issue, which I am going to share. Now, he asked that parents of a person died, and after their death, the son found a substantial amount of cash lying in the almirah of his parents, which he obviously deposited the bank account. And now the department says that it is unexplained credit. Nature and source is required to be explained by. And I always say that what is the nature and what is the source? The answers to these questions are fact specific. They are dependent upon the fact of a case. There is no law involved. There is no substantial law involved. Rather, I would say there is no law involved. So when source is required to be spelled out by you, which is essentially the facts-based thing, and the law envisages this onus to be cast on your shoulders, now this will be for you to come out to explain the nature and source. So if in that instance, hardcore instance which my friend cited, now if that son who happens to be an SSE and who was in the receipt of such bounty from his parents, which he claims to have been found from his parents, then the onus was on him to explain. So whether did he explain this thing? And if he did explain, then how did he substantiate that explanation? Merely explanation deholds the substantiation, or without substantiation is like throwing the water in the sand. And therefore, the nature and source, when the legislature says is required to be demonstrated by you, then it has to be demonstrated with some amount of proof. That proof or evidence may be the direct or documentary evidence, or it may be the circumstantial evidence. So if the cash was received in the Almira of his parents, the explanation must have been given by this son, and then he must have supported it with the help of the other witnesses who were there at that point of time, who may have given the sworn affidavit to have seen the availability of that cash. Their testimonies, if were tested on the touchstone of the cross-examination by the revenue, there ought not to have come any contradiction or inconsistency in their averments or the depositions made by them. Then in that situation, you will be deemed or you will be treated to have discharged your onus. And once the onus is discharged, then the rules of the game say, then it will go into the court of the assessing officer, and this thereafter will be the responsibility of the assessing officer to discharge back that onus. And that is why I always say the onus is like a game of ping pong, where a person in whose court the ball is, he is required to hit it to the court of his opponent, that is the assessing officer in this case. And once he discharges that onus by hitting the ball, and that ball reaching to the court of the opponent, that is the assessing officer. And then if an assessing officer wants to return that ball, then this will be for the assessing officer to return it. But then again, the assessing officer will have to discharge his onus, and merely saying on the part of the assessing officer that he doesn't agree with the contentions raised by the assessee may not be enough. He will also have to give reasons in support of his conclusion as to why does he not agree with the averments or with the contentions raised by the assessee. So that is how the games of onus, discharge of onus, now it keeps on playing. Then explanation not to the satisfaction of the assessing officer. Now somebody can say, sir, if the explanation has to come in any case to the satisfaction of the assessing officer, then I am sure that the assessing officers in physical form we had seen plenty, were never satisfied with our explanation. Now those physical assessing officers are going to be replaced now with invisible assessing officers, and not only with invisible assessing officer, but battery of invisible assessing officers. There is verification unit, the assessment unit, the review unit, and the technical unit. So now we will face the battery of assessing officers, and if they do not come to the satisfaction, then what can a helpless and helpless assessee do? Definitely, the position of an assessing officer is not an arbitrary position. He is a quasi-judicial authority. Quasi-judicial authority is one who is supposed to take his decisions judiciously, based upon certain principles of justice, equity, and good conscience. And therefore, if an assessing officer in the capacity of a quasi-judicial authority was not satisfied, then apart from he writes that he is not satisfied, then he will have to give reasons in support of his dissatisfaction. And even if he gives reasons in support of his dissatisfaction is not the end of the road. That is not the final, because he is not the final arbiter. He may be final arbiter for the purpose of assessment, but then his decision or his dissatisfaction or the fact that he was not satisfied is subject to the challenge before higher appellate authority or before the higher writ court. And before the higher appellate authority or before the writ court. Now, if you as an SSE or a representative of SSE can prevail upon that writ court or before the appellate authority, sir, the dissatisfaction of this quasi-judicial authority, that is the assessing officer, was not based on the cogent reasons. For these reasons, and in the face of the evidences which you filed, and then if that appellate authority now finds weight in your submissions and evidences, then in that situation, the appellate authority would be competent to substitute his wisdom, his judgment, his satisfaction to that of the assessing officer. So that is how. That is why the satisfaction of the assessing officer is called subject to the judicial review. Judicial review either by way of an appellate mechanism or by way of the writ mechanism. So since under the income tax most of the orders are appealable, therefore we can take recourse to the appellate mechanism, and we can say that if an assessing officer was not satisfied from the fact of the discharge of my owners while proving or while establishing or by substantiating the credit appearing in my books of account, then his satisfaction is subject to judicial review, and before the appellate authority it is amenable to be investigated. And that is how the legislature has used the expressions may, because then the assessing officer may. Now what does it mean? Whether this word may confers him. A question comes whether the word may in the section, because you will find such expressions may having been used by the legislature at several places. Section 68, 69, A, B, C. I mean, all these sections use the expressions may. Even in other places, like under section 50C, or for that matter, I need not to multiply my instances. You will find the legislature has used the expressions may, like under section 271(1)(c) also. Now under section 270 capital A also. I mean, the expressions may have. Now, what does this word may? Because may gives an indication as if a decision to be taken for or against is something which is based on the discretion of that authority. But then can it mean, or does it mean that discretion which is there in any authority be exercised at mere whim and fancy? Can that discretion which is there on the strength of the word may be exercised by that authority in an arbitrary or in an autocratic manner? And of course, the answer is no. Because whenever any discretion is vested in any public officer, an income tax officer is also public officer, or for that matter, even in an administrative authority, then the discretion will have to be exercised, not arbitrarily, not capriciously, not based upon any whim and fancy, but then it has to be based on certain principles of law of justice, equity, and good conscience. That authority will have to demonstrate that the decision or the discretion which he has exercised is based on the relevant considerations, is based on the application of mind, is based on the reasonableness, is based on the fairness, based on objective considerations. It may be my subjective decision, but then it was based on objective considerations. And therefore, when a sum is found credited in the books of account of an SSE, then he is to see whether that onus has been discharged in accordance with the law on the basis of the evidences, because it's a fact specific, and then whether the assessing office has exercised his discretion in accordance with the law. Now, similarly, because I have to come to those issues which have been flashed by Ramaswamy sir, therefore I am somewhat quick. Section 69, or for that matter 69A, or for that matter section 69B. Now, these sections more or less, in terms of its literal expressions, more or less, I mean, they're identically worded. That if there is found that the SSE has made investment in some asset, then SSE is duty bound to express nature and source. And if the nature and source is not explained by the SSE, or even if explained, but then it is not to the satisfaction of the income tax officer, then the section says that then it may be treated as the investment or income from undisclosed source on account of that investment which has been remained unexplained in that financial year in which that investment was made. Burden in such a situation under section 68, the initial burden to prove the credit was on the shoulders of the assessee, whereas the initial burden to prove that here is the investment made by this assessee in this year, now that is on the shoulders of the assessing officer. And once that burden is discharged, then thereafter that burden will shift. It is not the owners, that burden will shift on the shoulders of the assessee. Then that assessee will have to show either that investment has been duly explained with reference to his source or was not made in a particular year. And in that situation, the burden, will get discharged. And then the quasi-judicial authority, that income tax officer, then will take a call as to whether any addition on account of unexplained investment is warranted in the facts and circumstances of the name. The second important thing with reference to this section 69, 69A is that it will be deemed to be the of that financial year in which the investment is made. So aspect will have to be taken care of, because in case you had not been able to prove the year in which that investment has been made, then obviously the investment which has been discovered in a particular year will be the year in which that undisclosed investment will bear the brunt of tax. Now there is one section, section 69C. Section 69C. Now when there is an expenditure incurred by an assessee, the source of which is not explained by the assessee, or the explanation tendered by the assessee is not to the satisfaction of the assessing officer, then that expenditure will be deemed to have been incurred, made or paid by that person out of his income from undisclosed source. And that is what section 69C says. So expenditure incurred outside the books of account. So kindly mind it, because one of the questions which has been flashed now, that appears to use one expression of the bogus expense. Now this is not bogus expense. Bogus expense, there is some other section to take care of that kind of bogus expense. Now this is an expense which has been incurred as a matter of fact, but then the amount out of which this expenditure now is claimed to have been made now is unexplained. Therefore, the concept of unexplained expenditure under section 69C is materially different from the bogus expenditure. I am sorry to say that even the courts at times use the expressions for such kind of an expenditure or such kind of an expenditure which is to be covered under section 69C with the bogus expenditure. But then bogus and unexplained expenditures both are different, both operate in different field, both mean differently. Now, proviso was added to section 69C that even if these expenditures which have been incurred by you from a source outside your books of account may be an expenditure incurred for the purpose of earning a particular income, but then this will not be allowed to be as a deduction, because on the one hand the revenue tried to say, on the one hand we make addition under section 69C, but on the other hand if we allow you this deduction against the particular against the particular income against which you say that this expenditure has been incurred, that will nullify our decisions. And that is why the legislature in 1999 by Finance Act 1998 appended one proviso to section 69C to say that such expenditure, even if it may be an expenditure of the nature of the direct, proximate, and inextricable link with the income, but then it will not be, or can be said to be incurred even if wholly and exclusively for the purpose of a business, will not be allowed while computing your taxable income. So this aspect has to be, but then kindly see section 69 or 69B. Now, if there is any undisclosed investment which is found, regarding which the addition is made under section 69 or 69B, because that asset has been acquired out of your income from undisclosed source. But later on, when you happen to sell that asset, now this addition, which has already been made on account of income from undisclosed source being the cost of investment in this asset, now is amenable to be deducted as cost of acquisition when you happen to sell that capital asset in order to arrive at the amount of the capital gain. So in that context, to that extent, in that manner, the provisions of section 69 and provisions of section 69C are materially different. And this is materially different for the reason because of the specific insertion of the proviso to section 69C appended by the Finance Act down below section 69C. Now section 69D. Now I had in my practice of almost 35 years have seen only a couple of cases where the department has invoked the section 69D. And section 69D, I would say, has received a very lukewarm response from the framers of law. So much so, in rest of the act, wherever the expressions which were used otherwise than by the account pay check or account pay bank draft, like under section 40A3, 40A3A, or under section 43(1), or under section 269SS, 269T, 269HT, the legislature took care of all the modern banking facilities of ECS, electronic clearing system, or through any other prescribed electronic mode. But when section 69D is concerned, now this section is so seldom used by the legislature that the legislature even did not bother to the modern banking instrument in this section, and those account pay check or account pay bank drafts alone find place in section 69D, and the section doesn't find place of electronic clearing system so far or any other prescribed electronic mode. Now, I mean, it doesn't. Anyway, so section 69D says that if any amount has been borrowed on hundi or is repaid on hundi, is borrowed on hundi, any amount which is borrowed on hundi is borrowed or repaid otherwise than by an account pay check or bank draft, then in such a situation, it will be deemed to be your income. So it is unlike section 269SS, for which there is a penal consequence. Now section 69D says that if you have borrowed any money on hundi, or having borrowed, if you have repaid that money which has been borrowed on hundi, otherwise by way of an account pay check or bank draft, then such payment which is so made otherwise than account pay check or bank draft will be deemed to be income under section 69D. So having analyzed now these sections quickly, now I will quickly go to section 115 BBE, because the relationship of these incomes, section 68 to 69D and section 115 BBE, are quite inextricable, quite direct, quite proximate. 115 BBE, if you remember, was introduced by Finance Act 2012 with effect from assessment 2013-14 to say that any income which is covered by these sections now will suffer the tax rate of 30%, and no deduction on account of any expenditure or any other deduction will be allowed against such a deemed income. So far so good. But then came Finance Act 2016. Year 2016 was very important from the tax point of view, because it was the year of demonetization, and the period of demonetization, saw lot of upheaval in the field of the taxation laws. And one of the places which saw upheaval was section 115 BBE. Taxation Laws Second Amendment Act 2016. Now brought though from 15/12/2016, but then it was made effective from 1/4/2017, meaning thereby that it was made retroactively applicable on and from the assessment from previous year, starting from 1/4/2016. And the tax rate, which was stepped up to 60%, not only the 60%, but then the surcharge, 25% or 60%, so 75%. Then cess, effective cess rate comes to 3%. So in aggregate, now 78% is the effective tax rate under section 115 BBE. We seem to have completed the full circle, because many of you would recall that there was a time when the tax rate used to be as atrocious as like section 115 BBE. At that time, my seniors have told me that one point of time, the tax rate used to be as high as 97%. What happened? 97%. So it was brought down to a reasonable level of 30%, but then
Sir, mic mute, sir. Just wait.
who has done it?
Okay, okay.
It's all right now? Yes. So 115 BBE, 115 BBE now says that whether the income as referred under section 68, 69 A, B, C, D. Now, even if they are suo motu declared by the SSE, or whether it is determined or it is included or it is assessed by the assessing officer in assessment, we will suffer the tax rate qua this income, qua this kind of income, at the rate of 60%, and of course all other consequences which are there, will follow. And these tax rates are too high of the nature and magnitude that one may be tempted to say that these tax rates are confiscatory in nature. As I said, it has been made retroactive, and then we have got penal consequence for such section 271 AAC. Fortunately, it is not as sharp as section 270 capital A or section 271 AB, but it is somewhat moderate, 10% of 60%, that is 6%. But then penalty is a penalty. Penalty is stigma. Penalty is stigmatic, and this penalty is there. Now, therefore, this brings me, to that kind of distinction which I tried to make: deemed income versus undisclosed income versus undisclosed income from an undisclosed source. Deemed income, if they are deemed income, not under section 68 to 69D, then they will partake the character of income under the respective heads. If there is no other head, then the income from other sources, subject to all those decisions which are there, Radhaswamy Kakinada and all. I'm not going to the hyper technicality of the matter. So, deemed income, like whether it is 222E, whether it is 22410, read with section 36 subsection 5, or whether it is section 5629, or whether it is section 56-10. Now, these incomes will be income under the respective heads of income. These incomes will be assessed under the defined heads of income. These incomes cannot be said to be the headless income, and therefore, when such income will be income accessible under the defined heads of income, then obviously the tax rates which would be applicable would be the tax rates as are applicable in case of any other income. Whereas income from undisclosed source, undisclosed income from undisclosed source are the income which are liable to be added under section 68, 69, A, B, C, D. Now, these incomes, since are considered as undisclosed income, and that too from a source which is not known, and therefore whether will there be any head under which, because as a student of law, we always were told that every income has got one head. For the first time, Gujarat High Court in Haji, what was the name of that decision? Haji Fakir Muhammad Haji Hassan, 247 ITR 290. I mean, for the first time, coined the aspect of the headless income, and which was later on followed by Punjab and Haryana High Court in Kim Pharma. That these incomes, which are much away from the income from other sources, because the income from other sources sections are over at section 59, and therefore any other income which falls beyond section 59, that is section 68, 69, 69A, B, C, D, they are the headless income. And therefore, since they are the headless income, and therefore the benefit of a set off, even without section 115 BBE, in the light of the Gujarat High Court, in the light of the Punjab and Haryana High Court, I mean, the set off of the loss of other heads, I mean, used to be denied by the courts, even in the absence of section 115 BBE. So income from undisclosed source, now that has to suffer the stepped up higher tax rate of section 115 BBE. But then there is a third category of income which is very important, and why am I underlining it with a purpose which I will explain in a little while thenceforward. Undisclosed income from a definite source of income. So not all undisclosed income is liable to be assessed under section 68 to 69D. Undisclosed income may be from a definite source, and therefore even if such income has not been disclosed by the SSE, even if such income is undisclosed income of an SSE, but then it can be traced back to a particular and defined source of income, therefore it will be added as income under that defined head of income, and therefore it will attract the normal incidence of tax which is applicable to the income under that head. Like suppose bonus which has been paid by an SSE to his employees from a source not disclosed to the department. So in the hands of that employee, even if he has not disclosed his bonus in his return of income, but when this fact surfaces on record, then such bonus which has not been so declared by that person who received it, now for him it remains or it retains the character of salary, and it is liable to be assessed under that salary. Now that is a different matter, that in the hands of the person who has paid it. From income outside the books of account, for him it will be an expenditure which has been made out of income not disclosed to the department. Therefore it may be an expenditure under section 69C, and that will attract the tax rate of 115 BB in the hands of the payer. So there may be undisclosed income at both hands, in the hands of the recipient also, in the hands of the payer also, but then in the hands of the recipient it may be income under a definite source, like the rent paid by a tenant, rent or the arrears of rent paid by the tenant to his landlord from income which has not been declared by him. Now in the hands of the landowner, in the hands of the landlord, that arrears of rent received by him will be assessable under that income from house property, and therefore will attract the normal tax rate. Whereas this tenant who has paid these arrears of rent outside the books of account or from income from the outside books of account, that will suffer the tax rate of section 115 BBE. So undisclosed income may not necessarily mean the application of the stepped up higher tax rate of section 115 BBE. Now, suppose, because one or two questions are respecting to these things which I'm going to discuss, then I will touch upon all those questions. Now, on money received on the transfer of a property. Now, if I was holding some asset as a capital asset or as an investment asset, I happened to sell it, I received on money. Now, on money, since has got link with the transfer of immovable property, now that will partake the character of the capital gain. That will be part of the total sale consideration, which will now be worked on the basis of the declared sale consideration and now discovered sale consideration in aggregate manner. and then the capital gain will be calculated. Whatever capital gain come, depending upon whether it's a long term or short term, it will be taxed at the rate of 20% or 30%. But in the hands of the person who has paid this on money to me from a source outside the books of account, in his hand it will be undisclosed. Not only the income from undisclosed, the undisclosed income from undisclosed. So it was undisclosed income at both ends, but then there is a differential tax treatment in both the ends. Similarly, I run the business. My suppressed sales surface, either during the course of survey or search. Now, I may not have disclosed that income in my return of income, but then that suppressed sales from the business obviously is liable to be assessed under the head business. But then the person who has made payment on account of these sales to me, they have made it outside the books of account, and for him it will be undisclosed income from undisclosed source. Inflated business expense. Now I incur a particular amount in actual, but then I inflated that. Then it will be undisclosed, no, it will be disclosed expenditure, but then it will be undisclosed income. Because that excessive amount of expenditure which I sought to claim against my business profit, that is liable to be disallowed, meaning thereby that my sale, my business income would be larger. So when the business income would be larger, then even if to that extent it was my undisclosed income, yet it will be assessed under that business and it will attract the normal tax rate. So there is no such law that if you disclose anything, maybe as a sale, maybe as your income, that the assessing officer should accept it. No, because under section 68, if you remember, any sum which is found credited, it is liable to be scrutinized by the assessing officer in order to determine its true character. Now, an assessing officer cannot be shut out. Oh, I myself have offered this as my income and therefore you are precluded from examining the nature. No, that is not the law. There may be certain judicial decisions, but then when I discuss the law, I discuss on the first principles of law. Now, section 68 empowers the assessing officer to determine its true nature and source. And merely because I have given the color of that receipt as income, and thereby I want to take shelter since I have offered income, and therefore section 68 should not be made applicable on me. No, that is not the law. Now, kindly imagine, now suppose if I have shown something as a sale, maybe as income, but then the real character, if it is found on investigation, is not the sale, but it was my own unaccounted money which has been shown by me as the sale. Now, do you think, now would you say that the assessing officer should be precluded from examining the true nature and source of this amount, and therefore should accept all that you say on its face value, on this strength that you yourself have? But then it has got severe consequences, because if you say it was a sale and assessing officer accepts it as a sale, then the normal tax rate. But then if it is found on fact that it was not a sale, it was your own unaccounted income which has found place in the form and in the shape of, in the name of sale, then obviously then it will be your income from undisclosed source. Your stocks will increase, that is a different matter, but then the nature of this amount now will acquire a different character, for which there may be application of section 115 BBE. Therefore, I always say that since 115 BBE is a very harsh section in terms of the tax rate, therefore we should see that when we surrender, either during the course of assessment or during the course of survey, or for that matter during the course of search, our attempt should be, I'm not saying that our attempt should be divorce the actual facts which are there on the ground, but then our attempt should be there to declare the income under certain fact situations, and if in declared, then maybe that the normal tax rates are attracted. So suppose if there are unclaimed creditors in respect or from whom you have made purchases in the earlier years, whether they are no longer payable. If you offer in your return of income or during the course of survey, pay tax, then these additions are liable to be made only under section 41 subsection 1. And then 41(1) is a part between section 28 to 44 DB that is under that business. And therefore, such surrendered trade creditors will be taxed at 30%. If you offer on account of the gross profit or net profit differential, that will be part of your business income. Some bad debts, if you have required, then that will also be taxed under section 41 subsection 5, the Income Tax Act. That will be business income. If some expenses are found inflated, now kindly you have to take care of section 271 AAD, which has recently been introduced by the Finance Act 2020. But then if there are inflated expenses, then to the extent of that inflation into the expense, your business profits will be larger, and the business profits would suffer the tax rate of 30%. If the surrender is made on account of the suppressed sales, of course, I'm not saying that you surrender, dehouse the facts of your case, but then I am giving certain, viewpoints that under which, depending upon the facts obtaining on the ground, the surrender can be made. Suppressed sales, if sales are found suppressed, then sales obviously would go to increase the business profits. If some stock is found short, I am not on excess. I will come to that also. So if the stock is found short, then the inference may be that the stock has been sold outside the books. So that may be sold outside the books, but then that will give rise to your business income. If sale scrap has taken place, and that will increase with the book profit. So whenever you happen to declare and disclose income in respect of the assets, they are bound to create problem. If you declare income and then those incomes can be telescoped or can be appropriated towards the assets which are found, then that makes a very comfortable combination from the tax point of view. But then if you make surrender in the assets which are found, then the such investment are bound to be assessed under section 60 to 69D, and thereby section 115 BBE applicability. But then if the stocks are found more than what has been shown by you in your books of account, always there is a tussle. The SSE claims that it should be assessed under that business and thereby should attract 30% tax rate. The department's attempt is to show that this stock should be assessed as investment from undisclosed source, and therefore section 69 should be attracted, and therefore section 115 BBE should be attracted. But in that case, the assessees do argue, sir, you have undertaken an extreme arm of investigation, that is survey or search. You did not find even an iota or whisper of any evidence which suggests that I was doing something else other than the business. And therefore, the stocks have been found excess. Then obviously it must have been made or built out of the profits of my business only. And therefore, now this investment should be treated to have been made out of my business income. And therefore, the tax rate which should be applied. But then it is not that easy for the departmental authorities, for the appellate authorities to be convinced on it. Because the burden is on you. Though this is one way of discharging that burden by showing that you could not find any evidence other than the business which I am carrying on. There may be certain decisions. My friend Coimbatore sent me one, and that decision in the case of Lavalish Singhal, that is the SMC decision from the Jodhpur bench, but then it has discussed some other decision which say that if a person is conducting or carrying on business, is not found to be carrying on some other activity, that stock which is found is the stock, which is the stock of that business. It is not something stock of some other item, then it should be treated to have been, from that business, and therefore instead of 115 BBE rate, the business rate. So Lavalish Singhal, that you must take care of these kind of decisions. So Now, for 1 hour almost, I've spoken about a broad nature of these deemed income. Now, I'll take the issues which have been placed by Ramaswamy sir. Yes. The first question, the first issue which has been so raised. We have water, please. Thank you. Now, what is the difference between the deemed income and the undisclosed business income? So, sir, I've already dealt the deemed income may be of various types. Capital receipts which are not in the nature of income, and yet the legislature deems them as business income. Some amounts which can never be in the nature of income, but the legislature deems them as my business income, deems them as income, and therefore deemed income. Some income which may never be received is treated as income, that we can loosely call them as deemed income, like income under section 23A. So these are the deemed incomes, but undisclosed business income is the income now which is coming from the business but not been declared, and therefore deemed income other than the income which can be assessed as 60 to 69D would fall the definite source of income. And in any case, undisclosed business income, as the very name suggests that this is a business income, will be under the business only, and therefore it will affect the normal tax rate. So we can take those incomes alone which are assessed under section 60 to 69D will invite of 70.
Sir,
So that difference you can take it with the deemed income and undisclosed business income. The next
सर वॉइस ऑडिबल नहीं है आपकी.
My voice is audible. Sir, audible?
no, sir, voice is not clear.
What happened? Hello? Hello?
Hello, sir, voice is not clear.
Voice is not coming at all. What happened? Because Atul ji,
अब ठीक है, अब ठीक है, अब ठीक है सर, अब ठीक है.
Okay, okay. Now, the second issue is that what is the nature of income arrived on estimated basis for disalliance? Probably what I could understand from this question is that when income is estimated, then whether the disalliances can be made or not. Probably, I mean, though this question was not clear to me, but let me give answer by assuming certain facts. So if income is arrived on estimated basis, then it depends on circumstances of the case. So if my business is estimated on account of rejection of my books of account, or on account of the fact that I'm not maintaining books of account, or for any other reason. Now, if my income under a particular source is estimated, then all those deductions which could be, they all will be substituted by estimated income. But then any other, like section 68 or 69 or 69A, now those amounts will have to be proved independently by you. Now you cannot be heard saying, since your income has been estimated, and therefore, I mean, even the unexpected credit also should be taken to be assumed or subsumed by that estimated amount of income. Now that is not possible. That is not possible. Like in case of section 44AD or 44ADA. Now, if somebody who is following the presumptive scheme of taxation tries to say that even if there is any amount that deposits in my bank account, I'm the assessing officer should not pay. Primarily on the ground that I am not required to maintain books of accounts under the mandate of law, and therefore nobody should ask any question. No. Now, 44 for any foreign notwithstanding anything contrary contained in section 2243C. Not without prejudice to the impact and import of such a to 1690. And in any case, I mean, there cannot be any license for you to introduce unaccounted income, and that too on the text and on that too on the ground that this is your income has been estimated. Therefore, such estimated income now should be assumed to have taken everything which is there on this earth in it. No, that is not permissible. Next is whether the agricultural income received from the leasehold land can be treated as deemed income. No, if there is agricultural income,
सर वॉइस फिर से
Sir,
वीडियो भी नहीं आ रहा
voice is-
yes, then in that situation, sir.
Sir, sorry, voice is not clear, sir.
Okay, sir.
Yeah.
Yes, sir. Yes.
सर,
Now,
वीडियो भी नहीं आ रहा आपका
वीडियो तो आ रहा है मेरे हिसाब से तो
नहीं सर आपका यहाँ
नहीं
तो
आ रहा है, वीडियो भी नहीं आ रहा है, वॉइस भी क्लियर नहीं है।
what happened, sir? What happened?
आप वॉइस तो ठीक आ रही है आप वीडियो स्टार्ट कर लो आप
Should I? What about now?
वॉइस में डिस्टरबेंस है और वीडियो आ नहीं रहा।
What should I do now? Should I log off and then log on? What should I do?
So the voice is not. Yeah, we. Yes, sir. Okay.
now we can see you
Okay.
Now, can you see me now?
of course sir we can see you
Yes, please continue.
Agricultural income received from the leasehold land can there are some leasehold land of which agricultural income is
सर लॉग ऑफ करके दोबारा लॉग ऑन कर लो
hello. Am I audible now?
Yes, sir. Audible.
Who is unmuting me?
अब सर आपका चेहरा भी दिख रहा है और आवाज भी आ रही है
अच्छा ठीक है सर
जी
So, sir, whether the gifts received from unknown person can be deemed income? No. Yes. Gifts received from unknown person, they are deemed in the sense because section 56 subsection 2 clause 10 small a says that it will be your income. So whether you call it as income or whether you call deemed income on the grounds is gifts are normally not or should not be taxable, but then because of its meaning assigned to it under section 56 to 10, it is treated as income. Therefore, to that extent, you can say it's a deemed income, but then it is income nonetheless. Next is whether gifts received from relatives and friends with full source will be treated as deemed income. If they are source and receipt from relatives, then there is no question of even the income, because under section 56 to 10, if any sum of money received without considerations from the relatives is not considered as income under section 56 to 10. So if source is established, even in the earlier question, when you receive the gift from an unrelated person, that the source was established. Only that my reply was in that context only. So if the source is established, then it will not be treated as income if it is received from the relative. Whether the gift received from the blood relative who are not having known source can be treated as deemed income into the hands of the donee. Is there any way to... Yes. So when gifts are received from the blood donor who don't have the source, then of course it will be treated as an undisclosed income from undisclosed source. Therefore, any camouflage of the relative, even if introduced by you, now will not be treated as... So gifts received from the blood relatives who are not having known source can be treated as deemed income. I would say not only deemed income, income from undisclosed source. Now, is there any way to assess the donor? Now, of course, if but then the donor has not given you, or if the donor, but then the source at the end of the donor is not clear, then of course if the donor can also be roped in. You claim to have made this much of amount, but then what is the source in your hand? And on that basis, even a case of the donor may be reopened under section 147. What is meant by peak credit for the assessment of income? Can it be considered as income from business or undisclosed income? Now, peak credit is a credit. Peak credit is the credit, which is at the highest level on a single day or on any point of time in a day. Now, the theory of peak credit now is used and by a person when it is sought to be explained, when there are incomings and there are outgoings, that at one particular point of time there was the peak of the credit, and therefore that much was the income which can be said to be available, and therefore that can be the amount which can ultimately be added at the most in case this entire credit is explained, and therefore the peak credit and credit be considered as income from business or undisclosed income. No, if there is a credit, the source of which is not explained, then obviously whether it is peak or non-peak, it will not be treated as income from business. Obviously, then it will be treated as income from undisclosed source. The cash withdrawn and not deposited for a long period and redeposited later on, can it be considered as deemed income? So cash withdrawn but then not deposited for a long period, obviously, as I said in the beginning while explaining section 68, when any sum is found credited, or under section 69 when you are found to have made investment, the burden to prove its nature and source is on you. So when you claim that you withdrew it from the bank and later on you redeposited it after a lapse of considerable time, then the burden is on you, even if there is no considerable time. Yes. Yes, I was on cash withdrawn. The burden is on you to prove as to what is the source of the cash withdrawn by you. And the cash has been withdrawn, and this is the same cash which has been withdrawn by you on earlier occasion has been deposited in the bank account. Burden is on you to prove, maybe with the help of any direct or documentary evidences, or maybe with the help of the circumstantial evidences. The burden is on you. The initial onus is on you. It can be considered as undisclosed income in case you are not able to explain. Though there are decisions to this effect. I remember in 112 DTJ, Baldev Singh Charla's decision is there now, which says that if an SSE claims that this money which has been redeposited to the bank account was the money which he withdrew on earlier occasion, then unless the department is in possession of some evidence against it, then what the SSE says will have to be accepted. And Baldev Singh Charla's case, then there is one Mungipa investment is there. Now there is one case, I am forgetting its name, was contested by my nephew Somil in Delhi High Court, and Justice Khanna, now who is adorning Supreme Court, he was the presiding judge of that court. I mean, so if you are claiming to have redeposited the bank account, then initial burden is on you. But then if the department doesn't have any evidence in its possession that the earlier withdrawn amount has been spent somewhere else, then what the SSE say, the courts have said then will have to be accepted. How the bogus purchase is to be treated in the income computation. So if the purchase is bogus, meaning thereby that the purchase has been made out of the disclosed income, but then that purchase in fact has not been made. Something else is sought to be passed off as if it is a purchase. Then that purchase is liable to be disallowed. That will be termed as bogus purchase. And in that situation, the income computation, your business profit, I mean, that is bound to be increased. Can the bogus sale to be treated as undisclosed income warranted with higher tax rate and penalty? Yes. If you remember, in between, I touched upon this issue. Now, something which is being shown by you as sale, in fact, is not a sale. It is something different. And therefore, that something different is liable to be scrutinized by the assessing officer in order to reach to the bottom of the truth as to whether it is a sale or something else. And if it is found in something else, then that sale or purported sale shown by you as sale in your books of account is liable to be visited with a higher tax rate of section 115 BBE, with all obvious consequences which can be there in the form of penalty under section 271 AAC. What is the treatment of on money received in real estate transaction, capital gain or income from other sources applicable to the... I also touched this issue in my deliberations. If on money is in respect to the capital asset, then that on money together with the money which was off money, now both will be aggregated together. It will be taken as a sale consideration. The capital gain will be calculated. And once capital gain will be calculated, then there is no question of 115 BBE. Issue number 12. What is the treatment of addition accepted during the survey and search as well as assessment proceeding without proving mistakes in the books of account based on a drawing? Now, such kind of additions though are accepted by the SSEs earlier, because now there will be invisible assessing, faceless assessing officer on the ground that because of the standard of living. If you remember, there is one decision 91 TTJ, very good decision, 91 TTJ, GS Bhatia. And even without GS Bhatia's decision, if you read section 69C, it starts with when an expenditure is found to have been incurred by an SSE. So there must first be finding by the assessing officer that the SSE has incurred these expenses on his higher standard of living. The initial burden to prove that this is the expenditure incurred by an SSE, only then the burden to prove the source of that expenditure would rest on the shoulders of the SSE. And therefore, when you ask this question, addition accepted during, if you have accepted on facts, then obviously, I mean, then that cannot be contested unless you agitated that this concession was obtained by fraud or by misrepresentation or an account of coercion having been brought to bear upon you by the tax authorities. Question 13, what is the treatment of addition accepted to buy piece with the department? So this is the cost of the piece. So if you wanted to buy piece and if you have surrendered something on facts, then it will be very difficult for you to retract assessment. But then if you have under some misconception of law, then you can always make out a case that there can be no estoppel against law. The concession made by you in law, I mean, was under inadvertent mistake by you. And in that situation, the courts have always said that there can be no estoppel against law. But then on facts, if you have considered something, then it may be difficult for you to come out from that concession. Can received will be set off with 50C value in real estate transaction? Yes. Now, if there is an on money, then consideration received comprise even this on money, and then it will be compared with the stamp duty value. And if stamp duty value becomes less because of the aggregation of the on money and off money, then obviously then section 50C applicability will be ousted. Then section 50C will not be applicable. First time disclosure of old jewelry for the cases income above rupees 50 lakhs. Now this case again I have not been, I have not been able to fathom and appreciate this. Disclosure of old jewelry. Now whenever you disclose anything, then you will have to prove it that you are really having this much of jewelry which were acquired by you beyond 7 years preceding. Only you have to prove its source. But then if you are not able to prove that this jewelry has been acquired by you beyond 7 years preceding, then obviously this will be treated as been acquired by you in this year. And then burden to prove in that situation will be, should be and ought to be on your shoulders. So if you disclose that there was some old jewelry, now you will have to come out because you want to take advantage of that law, whereby you want that nobody should ask a question from you on the ground and on the pretext that this jewelry is pretty old. But then merely making a bald assertion by you, merely based on your bald statement that it is pretty old jewelry, now is not going to prove that this is pretty old jewelry, and therefore, I mean, there may be problem for you. Sale of jewelry, 16th, sale of jewelry and undisclosed income. So if you say that you have sold the jewelry, then you'll have to prove. I mean, this question 15 and 16 are interrelated. So you will have to prove that this jewelry was old, was acquired by you prior to 7th year preceding. Therefore, I mean, you should not be asked that question about the source of acquisitions of this jewelry. And in that situation, if you are able to prove, that is all right. Otherwise, you are not able to prove, then there is a problem. It is liable to be treated as a jewelry the current year. And then if you are not able to prove it, then the entire amount of the investment in that jewelry will be deemed to have been made out of your income from undisclosed source. Can we claim unexpected expenditure against undisclosed sales? Yes, sales cannot be brought to tax on gross basis. Now, even if there is some undisclosed, there is undisclosed sales, then obviously, I mean, the expenditure now will have to be allowed, because what can be brought to tax is the income, not the sales simplicity. But then, if expenditure on account of purchase claimed by you, this entire sales, I mean, is liable to be added. So, if entire sales is undisclosed, its business is also undisclosed, then what can be brought to tax is net income. Can we claim link unexplained investment and cash deposited in bank for non-account persons? I mean, I'll read it again in order to clear my doubt. Can the department link unexplained investment and cash deposited in bank for non-account maintained person? No. If both are investment, even the cash is investment which is deposited in the bank. If there is unexplained investment, so both investment will have to be aggregated, the source of which is required to be explained by you. Now, I have not been able to fathom and link as to how the querist wants to link the unexplained investment with the cash deposit in the bank. Now, the question is, then there was unexplained investment and there was some unexplained income which was found. The situation, or probably the case could have been, now whether this unexplained income which is liable to be taxed now can be claimed to have been set off against the investment, or there will be separate addition on account of undisclosed income and undisclosed investment. But then if, as the question suggests, both the things are unexplained investment only, because unexplained investment in any case is investment, cash deposit in the bank, that is also an investment, then SSE is required to prove the source of both kind of investments. And so these are all the questions. But then if there are other questions, I think there were other questions which are coming in chat. So if Ramaswamy sir asks me I mean, or if there are other questions from the audience, or Ramaswamy sir sent one more question to me, I remember separately, but then that is going out of my memory as to what was that question. So if Ramaswamy sir, could you come on the screen?
So you have dealt everything I just gathered from the some of our friends.
Pardon, sir?
I collected some of friends. That's all.
Sir, there are questions. Sir, cash receipt in the chat box. Sir, cash receipt from various persons is advanced towards sale of house plot. Amount received will be 4-5 lakh per person. Many persons have no tax return. What will be the impact? So if you have received the sale, if you have received the advance against the sale of house from several persons, then the initial owners to prove that in fact this was the amount received by you. The extent of onus which is there under section 68, that you have to prove not only the identity but then the capacity of that person, that may not be required to that extent, but then you have to prove that here is the person, he has entered into the agreement to buy my house and therefore he has given me advance, and what was the source, whether he was having source or not, kindly enforce attendance of that person, ask from him, he is totally stranger to me, and therefore you cannot expect me to verify about the source of that person who is paying me advance. Now all those kind of things can be pleaded by you, and in that sense you can be said to have discharged your onus, and thereafter in that case you can shift that onus to the assessing officer by making a request that these are totally stranger persons, and therefore kindly whatever inquiry you want to make in order to satisfy yourself, you kindly issue some money. At my cost, I am prepared to deposit the diet money. You make inquiries to whatever extent and length you want to take, kindly take. Yes, this seems to be the only question, I think. But then I found that there were certain questions which were coming. Anyway, so I finished it. I finished it a little early on this ground and on this belief that there will be questions, and therefore I mean I must leave some time for the audience to ask questions. Ramaswamy sir.
Listening to you.
Sir, I have finished my these deliberations. I have answered this question which was there in chat box. If still there are questions, then I am prepared. I am here, sir.
I have questions. I don't know what is the question.
Sir, we have one question in the chat box. Can section 60 can section 69D and section 269 SS and section 269T operate simultaneously, that is charging tax as well as penalty?
In fact, penalties are always independent, but then if you say that the investment has been made by me in cash, then obviously there is no question of any 269 SS or section 269T coming into force, because section 269 SS is coming when you accept the loan or deposit, otherwise then by an account pay, check or bank draft. 269T is applicable when you repay the loan or deposit, otherwise then by an account pay, check or bank draft. But then if you are making investment under section 69B, maybe out of your income from undisclosed source, then there is no question of attraction of section 269 SS or section 269T. By the way, Mr. Srinivasan, where from did you read this question? Because it is not appearing in the chat box.
Sir, there in chat box.
Where?
In chat box. There is a...
Okay, probably you have got some extra sensory perceptions which I don't, because I am not. I'm not seeing here. There's only one question of Mr. P. Vishwanathan at 5:24 p.m. which I have replied, and he has sent me the thanks also. That is my earning.
Sir, we have only one chat box. Sir, Sir, we have one more question in the chat box.
Question?
Please, sir. Please, sir.
Sir, if undisclosed income just falls under the respective head.
Your voice is too feeble, unlike me.
Sir, if undisclosed income just falls under the respective heads.
Wait, sir. Sir,
I am not able to make out.
Sir, I ask one question, sir.
Pardon?
Just wait, sir. One more question from the chat box.
Ah.
Sir, if undisclosed income just falls under the respective heads, won't it be unfair with the other honest taxpayers?
I could not get Mr. Shanmugam. Your voice
If
is clear.
undisclosed income,
Yes.
if undisclosed income just falls under the respective heads,
Yes.
won't it be unfair with the other honest taxpayers?
No. Other honest taxpayers need not to pay any tax apart from the tax disclosed by them. Undisclosed income of any person is found is not only visited with tax, but then the penalty under section 270 capital A, and then with all prosecutions which can be there under the act for concealing the income or for distorting the true income. So this is the price which a dishonest taxpayer will have to pay as compared to the honest taxpayer.
Yes, sir.
Yes. Now,
Whether
whether tax can be charged under section 115 BBE on undisclosed income for full year, while the fact is that 115 BB in December 2016. Pavanji, I mean, when the section is brought, the charging section is brought with effect from 1/4/2017, that means that has been made effective for assessment at 2017-18, and that means that will cover the entire previous year beginning on or after 1st April 2016. There is no such concept of dissecting a previous year. Now you can very well agitate the very enactment of this section to be in the nature of retroactive on the ground of this section being unconstitutional, arbitrary, and lopsided. Now that may be different matter, but so long as its constitutional is not challenged or is upheld by the court, then even if it operates harshly, then also, I mean, there is nothing objectionable which can be found. Next is if undisclosed income, repetitive. I mean, everything else is repetitive in this chat box.
Sir, one more question.
Yes.
Yeah. Whether tax can be charged under section 115 BBE on undisclosed income of figure, while the fact is that 115 BBE in December 2016 it was introduced.
No, I have already replied this. Now, next question is to conclude all deposits made in the ordinary course of business be regarded as investment made. So who said? Made into the ordinary course of the business. Now there is no such mandate in law that will invariably that that any deposit made by you, the burden is on you to prove its nature and source. I mean, that will suffice for me to say. Rupin Merchant, sir. What is this?
Sir,
Regular sale is done to check after passed in bank account or cash sales of around 1 to unknown per. No, it doesn't. I mean, I could not make any holistic reading of this checkered question. With utmost respect, I would say I could not make out, sir. If you can help me, Ramaswamy, sir, to make me understand this query, sir. Section 45(3) versus section 56. Sir, section 45(3) and section 56, to what extent they have got any linkage? Now, section 45(3) is applicable in case when the capital asset is brought by a partner or a person to become a partner in a firm, and the value recorded in the books of account of the firm is deemed to be the consideration in respect of the transfer of asset by that individual partner to the firm. Whereas section 56 is applicable. Oh, you want to say that when what would happen in the hands of the recipient firm? Probably that is your question under section 56. So this is a quite litigative question, that insofar as that partner is concerned, then he is required to pay tax by way of capital gains only in respect of the sale consideration which is appearing in the form of the credit entry in the books of account of the firm. But then what would happen? Probably the question is that what would happen in case that value recorded in the books of the firm is lesser than the stamp duty value. Now, whether in the hands of the recipient firm, can that difference be treated as income under section 56 subsection 2 clause 10 small b? Now, that is a very litigative question, and therefore maybe that you will have to invoke that those principles of general law, that the partner and partnership firms are not two distinct entities. They are one and the same, but for the purpose of income tax, they have been made separate entity. And therefore, when the legislature wanted to tax the amount of capital gain on account of this transaction between the partner and the firm, it has specifically so provided under section 45(3). But then in the absence of any specific provisions on the lines of section 45(3), since section 56 is silent, therefore nothing should be made taxable in the hands of the firm. That kind of an argument is available with you, but then the department, is determined to take it in litigation. Whether interest can be charged under 234A and B if tax already charged under section 115B. How can, because section 234A in Pranay Roy's case, Supreme Court has said that even if your return is late but that the tax has been paid, then no interest can be levied. 234B, if the tax has already been paid before 1st April of the assessment year, then also there is no question on the 234B. So interest cannot be charged. Yes, Pavanji, your from Rupin Marcha, in continue earlier question whether we have to prove sales or if we do not able to purchaser, what would happen in case of sale? Rupinji, there are certain words which are missing and that is very difficult, like we don't able to purchasers. It doesn't make any sense to me. Maybe that I may be ignorant to that extent, but then it doesn't make any sentence. Either there is some missing of the words, and because of the missing of the words, everything is lost. Mr. Vishwanathan, sir, unsecured loan received from directors by a private limited, there are various credits and debits. For example, credit total 50 lakhs and debit total 40 lakhs. Closing balance is 10 lakhs. Then what is your question, sir? Mr. Vishwanathan, so far as the facts are concerned, it's all right, but then what is your question? Should we consider 50 lakhs as unexplained credit or 10 lakhs? Of course, if there are receipts and goings, then the peak credit can be invoked. And depending upon as to how these 50 lakhs are placed or 40 lakhs are placed and what was the peak, that will be taken. But then in this manner, the way you have mentioned 50 lakhs and then 40 lakhs, therefore can 10 lakhs be taken? No. Answer is, so peak credit can be there. The conduct of the account will have to be seen and then peak credit can be claimed. I think there are no more questions, Mr. Shanmugam.
No question.
So we can proceed to wind up.
From the audience side, we will proceed to wind up, sir.
Yes, please go ahead.
Yeah. Sir, very much thanks for your presentation. First of all, I want to spare the time to test. So, my honorable secretary to propose. Thanks. So, apologize, sir.
Ladies and gentlemen, pleasant evening to everyone. It's an immense pleasure to propose a vote of thanks on behalf of Coimbatore branch of ICL. My special thanks to today's speaker, eminent personality, former member of Income Tax Appellate Tribunal, Dr. Rakesh Gupta, for allotting a time to address for Thank you so much, sir. Our past president, GR sir, has in his opening remark rightly mentioned that you are a walking encyclopedia. It is true and it is deserved for you, sir. In fact, in many members in the has commented in his chat box, individually, and the Coimbatore branch has chosen the right person for right topic. To you, sir. Thank you so much for your addressing to the Coimbatore branch. My thanks to the past president Zia sir, who helped us to get time slot from such a wonderful speaker we had today. Your services and help to our institute and members is phenomenal one. We pleasure to have you, sir. Thank you, sir, for being with us. At this juncture, I want to share that there are 170 members has participated in and enriched their knowledge, which is highest participation in the webinar series ever we had. I thank all the chairman of the branch, senior friends and students who have participated this webinar. I thank the branch Mr. Mailwanan, who has also organized this program in grand manner. One important announcement to the members on 9th October, that is on Friday, there another webinar on Companies Act of 2013. The eminent speaker from Mumbai, CA Himanshu, is going to address on the subject of audit under the Companies Act 2013. I request all the members to participate and enrich your knowledge. Thank you, one and all. Thanks once again. Over to Chairman.
Thank you, sir. Thank you.
Thank you, sir. Thank you. Thank you. Thank you.
Thank you very much. Thanks a lot.
Thank you, sir.
Thank you.